90% of startups fail in the first 2 years. It's a really high failure rate.
Yeah.
A lot of people run out of cash, and there's no market pull, and there's all these other factors. So, for example, quantum computing is a major focus for all states and all governments, and that is the next thing. It'll make AI obsolete.
What right now, in your opinion, is the biggest grant opportunity that startups are completely not thinking about?
So the number one is the R&D tax incentive at this point in time. So that's the one that a lot of companies that are early stage that are doing R&D should be tapping into. On top of that, there's the industry growth program, the CRCP grants. If you're in medical science, there's the MRFF grants. New South Wales has a number of amazing grants out there as well. So there's a number of big ones that you can tap into. And some of them are up to $5 million in funding.
So how does this work? Let's break it down. The thing that came out of the Industrial Revolution that revolutionized things wasn't really the automobile.
No.
It was the assembly line.
Correct.
Henry Ford created the assembly line. He created standardized the whole process, right?
And we've got quantum computing on its way through. We're never going to see anything like this ever again.
Stuart Haines, thank you, Stuart, for doing this. Mate, so this show is called On-Ramp, and the reason it's called On-Ramp is because it's an on-ramp to a lot of cool things for me.
Yep.
And I get to meet cool people like you and, ask my 20 questions and get to learn about the world and learn about some of the amazing things that you're doing.
Yep.
I suppose to kick off, for those listening in, I'd love to get a 30-second overview about yourself.
Yeah, and myself and the company.
Sure, yeah.
Yeah. So my name's Stuart Haines. I head up Haines Consulting Group. So we specialise in non-dilutive funding. We're the largest in the country by far. We've got over 600 clients, and we specialise in tapping into non-dilutive funding for tech. So medtech, biotech, agtech, defence tech, space tech, quantum computing, advanced manufacturing, and I love what we do.
Amazing.
Yeah, it's great.
How long have you been doing this?
Long time, I'd say. It's over 10 years now.
Yeah. Well, I want to ask you a lot of things today because you're working with, so many interesting industries.
Oh, it's amazing. Yeah.
But I want to start with big picture stuff first.
Go for it.
Given you're working with founders, you're working with startups every day.
Yep.
What do you think about the Australian ecosystem and startup ecosystem relative to, let's say, something like the American one?
Oh, we're world class. We're in, from my understanding, we're in the top 5 in the world. Victoria has a massive startup scene, followed by New South Wales, and the startup scene here in Australia is amazing. And that's due to a number of things regarding the focus of the startups situation, but also our R&D and the commercialisation of the tech. So it is world class, hands down.
I think the R&D is a good one, right? Because I think that's, I remember you were telling me, if you're starting a business, look at the R&D first.
Yep, and you tap into that one first. Yeah.
And so for people that are probably unaware, it might be good to give them a two-line on what R&D tax is.
Yeah. So the R&D tax incentive is a special grant, what I would call a grant that's been around since, from my understanding, the 80s. It's one of the best in the world, and it's all about supporting research and development, and for early stage, for eligible expenses, it's up to 43% in the dollar.
Yeah.
Now, things are changing with it. The government's done a review recently. They've just published their report. So there will be changes, but they're all about enhancing the R&D here in Australia and taking it to the next level. So there's going to be some changes, but fingers crossed those changes will be of benefit for the country.
And is it what are the changes? Are they focusing more on certain industries versus others?
No, there's still the 7 pillars.
Okay.
And so that'll be the focus, but it's all about having more money getting into the industry and sort of eliminating the administration costs.
So what are the 7 pillars?
So we've got the medical science, mining, ag tech, defence tech, space tech, and we've got emerging economies, and there's also the that includes in quantum computing and those sort of things. And
then you've got a background in ag tech, don't you?
I've done a lot in ag tech over the years, yeah. So,
and you were part of an accelerator where you used to chair the accelerator.
Yeah, so that was part of Rocket Seeder. Yeah, so it was. I was on the Rocket Seeder board for 7 years. It was amazing. So it's all about helping those newcomers that are coming into the industry, those really early startups, and helping them get through to that commercialization stage. Because ag tech is, so to put it in perspective, Victoria exports 90 billion in food and fibre. It's our biggest exports in the state, and it's one of our smallest tech scenes. So the imbalance, there's a huge opportunity there, but it's also one of the hardest tech scenes to be involved with, because farmers are set in their ways in certain areas, and other ways they're very innovative. But it is one of the biggest growth areas.
And I think probably one of the industries that is really ripe for disruption. I mean, especially when you look at, because with ag tech, I feel in my experience, looking at a lot of early stage businesses, they fail primarily because the basic unit economics don't make sense unless they get to a certain scale.
Yeah, and there's many factors. So around 90% of startups fail in the first 2 years. It's a really high failure rate.
Yeah.
And that includes individuals who register an ABM but don't do anything with it, but that's still classed as that statistic. But it is a high failure rate. But the reason why is because a lot of people run out of cash, and there's no market pull, and there's all these other factors. There's many, many factors. There's no one reason, because if there was, we could just focus on that one reason.
Yeah.
But the tech that is getting through past that 2 years here in Australia is amazing.
Yeah.
Yeah.
So you said there's about 570 or so grants.
Yeah, 572 grants. It fluctuates on a daily basis, but there's around 572. Around 90 of those are for business in particular. And then if you exclude the ones that are either too small or they're for natural disasters and those sort of things, there's usually around a top 10 for those really emerging technology type companies.
Mm-hmm. So if you're looking at, and are they all guided by 7 pillars that you mentioned earlier?
Majority of them.
Yeah, majority of them.
Yeah. And it's for the national interest of the country.
Got it.
Yep. So, for example, quantum computing is a major focus for all states and all governments.
Yeah.
And there's a big reason for that, because at the moment we all talk about AI.
Yeah.
But what people aren't talking about is QT, which is quantum computing.
Yeah.
And that is the next thing. It'll make AI obsolete.
Hey there. Sorry for the interruption. It's only going to take a moment. If you like today's episode and would like to see more content like this, please like, subscribe, and follow the channel. This will help us grow and invite more amazing guests onto the show. Also, if you know somebody you'd like to see on the show as a guest, comment their name down below or reach out to me and we'll make it happen. Now back to the video. What are you thinking? Because I love talking about this. I think there's been 6 episodes. You're the 6th episode, I think, of the show. I've asked everybody what they think about quantum.
Oh, it's insane. What it can do and achieve. It'll and the fact that we've got some of the biggest quantum computing companies in the world based here in Australia, due to the focus, it's a huge benefit.
Yeah, where do you see the biggest disruption?
Oh, what it'll be able to achieve.
Yeah.
So
I mean, what space do you think? What sector? It's going to be everything.
So the tech I saw yesterday will revolutionise transport.
Okay.
Yeah. So it'll revolutionise everything basically within the industries that companies are working in.
I'm looking at the potential ramifications for the medical industry.
Yeah.
Again, huge drug discovery.
Yep.
So when we look at the 570 programs and the 90 that are for business, the majority of non-business programs, where are they going? Different parts of the sector. So things like, the other ones that aren't business related are things that go into services for regional areas, and they might be grants for Aboriginal communities, for example, not for profits, those sort of things. Yeah. Okay.
Yep.
And so if you've got to look at structuring non-dilutive funding into your business early on, if I'm a startup founder, what are some of the things that I need to put in place into my business as best practice right from day one that's going to hold me in good stead if I come to you in a year or a couple of years' time?
It starts with the real basic things like setting up the company correctly. So, for example, trusts, family trusts, those sort of things, most grants they're ineligible for.
Yeah.
So you have to set up an ABN, registered for GST, an Australian company with Australian ownership, those sort of things. So it's the real basic business things.
Yeah, PTY, LTD.
And then ticking off all of those. And then with the big grants that are out there, they have guidelines, and you have to make sure that you meet all of the guidelines before you even put a submission through. Yeah.
Yeah. So what's the one big thing that you think is common amongst the applications where you go, oh, you know what, I see this error all the time?
Error-wise?
Yeah.
Not reading the guidelines.
Yeah.
Not putting enough thought through for the application itself. Writing basic answers when you're competing against world advanced tech, world first.
Is it sort of more on the criteria of the novelty of the technology, or is it more around the business application and the go-to-market? What's more important?
It's a mixture. You got to tick all the boxes for your application to have the highest chance of success.
Yeah.
So, for example, you've got to have a strong go-to-market strategy or a strong R&D strategy. You've got to have a strong team or founder team or a board, for example, or a board of advisors.
Yeah.
You've got to have market pool, for example. You've got to have a big, a strong market to be able to go in there. New to Australia or new to the world, innovation is a really big thing as well. Because if there's heaps of competition out there, for your chance to be, very successful is going to be very hard.
But it's difficult, right? Because if I'm an early stage founder, it's hard for me to get a team in place because I need funding to get a team in place.
Yep.
And it's sort of like you're stuck in that catch-22.
So it's sort of like when I say a team, you can start by advisors, a board of advisors. So these could be high caliber individuals that you can bring on to assist with the early stage of the company itself, because you can't go out and employ 10 people when you don't have zero revenue and you don't have any funding coming in or cash in the bank. So you have to be very strategic so that you've got a strong timeline in place for the company's growth.
So let me ask you this. What right now, in your opinion, is the biggest grant opportunity that startups are completely not thinking about?
So the number one is the R&D tax incentive at this point in time. So that's the one that a lot of companies that are early stage that are doing R&D should be tapping into. A lot don't even know about it. We don't get involved in that. But on top of that, there's the industry growth program, there's CRCP grants. If you're in medical science, there's the MRFF grants. New South Wales has a number of amazing grants out there as well. So there's a number of big ones that you can tap into, and some of them are up to $5 million in funding.
Yeah, okay. Yeah. So how does this work? Let's break it down for us. How does the process of, let's say I've come to you, I want to apply for one of the innovation grants. What's that process like from starting an application to going into review? Once you get awarded, if you get awarded, how does that work?
So we do a lot of due diligence at the start before we even go into application mode, because we want to ensure that the application has the highest chance of success because it is highly competitive. So, for example, these CRCP grants, you might have 250, 300 applications, for example, and they'll select 22 applications as the successful outcomes. So we do a lot of due diligence to ensure that we've got really strong applications, strong project partners, and then we work with our clients to put those submissions together. So that would involves the strategy, the project scope, project plans. Our clients do a lot of the budget process itself, because if and when they're successful, that budget is literally cut and placed into their contracts.
Sure.
So they need to know where every dollar's being accounted to, in line with their milestones, in line with the project plan, and then having strong project partners that are working on the project as well gives it the highest chance of success. And we put it all together. Then the government reviews it. If it's successful, they go into contract negotiation stage. They sign the contract, and then they go into commencing the project based on what's been submitted, what was approved, and the milestones that were outlaid in the application itself.
And most funding, is it like matched funding, or is it just grant?
Majority of match funding.
Match funding. Yeah. So what that means is if you get $1 million, you got to raise $1 million.
Yeah, so $2 million project, you put in $1 million, and if successful, the government will put in $1 million as well.
Got it. And do you have to have that $1 million before you receive the $1 million?
Yeah. In most situations, you need to have evidence that you've got access to that funding. So that might be through an investor, might be through a family investment arm.
Director
supporting
loan, whatever.
Director's loan, whatever it is, but you need to be able to prove that you've got access to that.
Yeah.
Because they want to ensure that the companies they're backing are going to be around in the future.
Got it.
Yep.
And how many companies would you say every year get grant funding out of the 90 business grants? Like ballpark.
So with the industry growth program that's been around for 3 years, from my understanding, 114 have been successful to date.
How many still around? Do you know?
Well, they're all
still around.
Yeah.
Okay.
Yeah.
Well, that's good.
Yeah. From my understanding.
Yeah.
So yeah, but and over 10% of those are our clients.
Amazing.
Yeah.
Amazing. So, what's your formula? Do you have a formula? How do you pick?
Look,
how do you pick the winners?
It's not so much pick the winners. It's all about the particular grant, the guidelines that come out at that point in time, and the project, making sure the project aligns with what they're looking for.
Yeah.
And then putting together the best and strongest case for basically for support. The way that I look at it is that getting support from the government is just like you would a VC or an investor of some sort. It's the same thing. It's just next level regarding the due diligence process.
Yeah. So that's interesting, right? Because I'm typically on the other side of it, where people come to us for dilutive funding.
Exactly.
How do you look at that when you're talking to founders? Because typically, whether they're going to raise match funding or whether they're going to raise just seed, pre-seed capital, whatever it is the advice to sequence either or before? How would you generally advise founders to structure it?
A lot of founders come to us. So a lot of VC funds will refer their portfolio to us, so that we can help them get as much non-dilutive funding as possible. But what we do, it's very much you need to have access to the funding to apply for the grant. So to the match funding side of things. So a lot of those companies that are doing really well with their capital raises or have access to funding, they're the ones that are coming to us going, hey, we would like to apply for this.
Is there statistically like a sector that you've got a better chance of getting a grant at than the rest at the moment right now? Like whether it's AI or quantum or...
It's within the 7 pillars.
Yeah, okay.
Yeah. So anything outside of that, it's so hard.
Got it.
Yeah, you got to be within one of those pillars, if not two. So there'll be some that'll be within like medical science, but at the same time, it's emerging technologies.
Yeah.
Some may be doing defense as well as ag tech.
Yeah.
So they'll be doing 2 pillars at the same time.
Got it.
Yep.
Is it better? Is it better or worse?
It depends on the grant.
Okay.
Yeah.
And then if you're, let's say, going after a grant, like at what stage do you need to have your product? Do you need product market fit? Do you need...
you have to have all that addressed before you even go into application.
Got it. So not necessarily revenues, but a validated product.
You need to be able to have at least an MVP.
Yeah.
Depending on the grant. I mean, if it's super early stage funding, like the AEA grants, for example, that you could be a TRL 3, TRL 4.
Yeah.
But if it's the bigger grants, like the industry growth program, it could be like a TRL 5 or 6.
So let's break that down for a quick second, because I think TRL is very interesting, right? So technology readiness level.
Correct.
A scale of 1 to pretty much 7.
9.
1 to 9.
Commercialization's 9.
Yeah.
Yeah.
Break it down for us. How does it work?
Yeah. So look, when you come up with an idea, thought to your head, that's a TRL 1.
Yeah.
Okay. And then it works this way. TRL 3 is where you're doing the R&D side of things. A prototype is around the TRL 6.
Okay.
And then you might have a version 2 of that prototype, and testing in that will be TRL 6, right through to TRL 9, which is your commercialization.
Yeah, got it.
And it's there's during the R&D process, you'll go like a TRL 6, TRL 7. There's a lot of research, a lot of testing, a lot of development, and so you're moving your way through that.
Like, why am I back at TRL 3 again? I was just at 6.
Yeah. Back again.
And then you're stuck in that loop.
Yep.
That's really interesting. What is the biggest grant that you worked on, and what was the grant you worked on that was the most fun?
Every day I get to work on a fun project.
Yeah.
So, for example, today was a medical science project, rare disease. This afternoon was a cancer cure. potential cure. Then tomorrow will be semiconductor manufacturing streamlining. So groundbreaking.
Do we have much over here in terms of manufacturing?
We do, yeah, but it's we need more of it, a lot more. Yeah, advanced manufacturing is is the focus for the country.
What do you think? Like, I mean, do you think there's a role in? It's hard to think about an industry like semiconductors.
Yep.
It's almost, when I think about it, I think about the thing that came out of the Industrial Revolution that revolutionized things wasn't really the automobile.
No.
It was the assembly line.
Correct.
And I think that's what Henry Ford did best. He created the assembly line.
Yep.
He created standardized the whole process, right? And I think it's almost parallel that we live in this silicon-dominated universe at the moment.
Yep.
Where the assembly line is almost data centers. It's energy and water that the data centers need, and so on and so forth.
Yep.
Do you see the Australian government, whether at the federal or state level, doing enough from a grant perspective to support that?
Look, they're trying their best, but there's a lot more opportunity. So, for example, in biotech scene, so life sciences, biotech, medtech, and life science is our biggest tech scene in Australia by far. That's because we've had decades of focus on it. Our calculations, as in my organisation, we calculate that that sector is around 40%, a bit under 40% of the entire tech scene.
Okay.
Some estimates say it's under 29%, but it could be up to as close as 40%. So it's huge. Mm-hmm. We've had this amazing R&D tax incentive that has supported this R&D, but now we've got a situation where a lot of that technology is now coming to commercialization, but we're not supporting any of the big manufacturing facilities. And when I say big manufacturing facilities, I'm talking about the $100 million facility or the $250 million facility.
You mean like CRO, CDMO type facilities?
Big manufacturing. And so, we've got facilities that do that, but we need more because we've got this amazing drugs that are being produced here. We could produce them here in Australia. We could have manufacturing facilities that are completely automated, fully automated, and that's the manufacturing of the future. So it's full automation, and then those drugs could be just flown all over the world.
Can I ask a question on the R&D stuff for biotech? Do you think it's a bit that the system's being gamed a bit? I see a lot of, because we invest in a lot of early stage biotechs, right? And they'll typically come here, do their phase 1 trials. And then the game is head over to the US or wherever, right?
Some have, but a lot of the amazing Aussie companies that have, they've always wanted to stay. They've got market pull every day going, come over to America, come and set up in this state, we'll give you this amount of millions of dollars. And that's happening on a daily basis, but they still stay here. There are others that have taken advantage of things, but that the whole review of the R&D tax incentive was to combat that. It's one of the things they're trying to combat.
Yeah, it's interesting. I mean, I think about it, and I think whether it's obviously there is a present caveat. There's almost a funding gap, right? Where if you're in the US, you can get funding from a number of large institutions and funds.
Yeah, of course you can.
And the valuations are higher, and the addressable market's bigger, and the reimbursements, all pathways more pronounced. But if you're in Australia, where do you think that gap can be filled? Is it superannuation funds? Is it other funds that can come in? And
so my personal opinion is that the trillions of dollars that are in our super funds, we should be able to invest into startups. That is currently being reviewed. It was one of the recommendations in the R&D tax report that they've done. And fingers crossed that will be something that gets approved because that could potentially be one of the game changers.
Do you think the R&D system's over-indexed to life sciences?
No.
So you think 40% shares?
That's just because it's had more focus over the years. So you've got all these different funds, universities that have been focusing on that for decades. For example, ag tech has been only a recent focus in the last say 5 years. So it's got decades to catch up on it. But what we want to do is we want to leverage off that success of all these new drugs coming to market that they're coming out. And basically what we want to do is then, take it to the next level where it's all about building the manufacturing facilities of the future here in Australia and then exporting around the world.
Yeah.
Yeah, because the quality control would be is amazing. Our TGA is world class and consistent with others around other countries around the world.
Absolutely, yeah. And look, I mean, I think from that perspective, I think that from an ultimate liquidity event standpoint, we do have pretty good public markets here.
We do.
I'd say it's, the ASX would, in my opinion, be one of the top 5 global exchanges.
Yeah.
And so I think there's definitely, a lot of scope to build early stage infrastructure here.
Yeah.
Do you think when you look at the 7 pillars,
Yep.
do you have any favorite children?
Look, they're all fun.
Yeah.
That's
what you say,
It
right?
depends. And no, it is because I'm working on this one where it's combating biosecurity.
Yeah.
For the agriculture sector, protecting our $100 billion worth of exports.
Yeah.
It's that to me is awesome. The technology it's being built and it's all Australian tech and the founders are absolute geniuses. But that sort of stuff just I love that. And then and then working on a different project where, like for example, Ionic, where they've built technology that you can do climate testing on any laptop in the world. And so it's a world first. No one else can do it. It's amazing. So that it's working on these different projects every day. It's awesome.
I'd love to hear about a couple of projects that you've been a part of.
Yeah.
Tell me about the biggest grant application that you were part of.
Oh yeah, there was one that we did that was worth 74 mil. That was fun.
Okay, that's a big boy.
That was awesome. It was we had a solution to I can't go into much detail, but it was a solution to support a certain community within the Australians across Australia. And we had a solution that was better than the incumbent solution that was being done.
Yeah.
From a digital point of view.
Got it.
It was an amazing process going through that one.
Okay.
And then try and get that across the line. We're up against the incumbents that had been in this, had been set up for decades, and it really ruffled a lot of feathers.
How does that generally play out? Because we were talking about this just before we started recording, right? How all systems are falling into this sort of monopolistic.
But this is the thing. This is where we're currently in a position of mankind where this has never happened. Now, there's people my generation who lived before mobile phones. Everyone having mobile phone in your hand, having access to the entire world, and now we're going into like AI, and then we've got quantum computing on its way through. We're never going to see anything like this ever again.
It's interesting. I'm going to ask you a few, I suppose, slightly more personal questions.
Go for it.
You spent 9 years at BlueScope.
Yeah.
So you started your career in steel.
Construction, yeah.
Real hard industry.
Yeah.
I think that, one of the things that I've been thinking about more so in the last few years is none of us own, enough tangible assets that, we perhaps are not indexed high enough, even as a country, on some of the hard industries.
Yeah.
Why do you think that is, and what do you think we should do?
In regards to like our older sectors, regards to, so look, steel is a critical product. We need to, we've kept in Australia, we've got an amazing company that is doing really well. I had the privilege of working with Union Steel back many years ago that was then bought out by the Smorgon Steel, or the Smorgon family. And then from there, BlueScope bought them out. So I've been through this journey of the entire industry being formulated to where it is today. And having those critical industries is so important for the security of the country, but also keeping that manufacturing in the country. So BlueScope has its facilities up in Wollongong. They've got facilities down here at Port Kembla, and then you've got the other industries, steel industries, that manufacture the reinforced bar and those sort of things. So having that sector is so critical here in Australia, and having it so that it's competitive on a world stage, but also having the high quality that we have coming out of this country is so important. And, we've been very successful over the last decades in particular.
Yeah.
There's been key CEOs of these big companies, in, let's say the steel industry, who have worked really hard to keep all the manufacturing here instead of offshoring it.
Which I think is so important, right? Because obviously, as Australia, we've got a real advantage in that we're a major producer of so many critical minerals and raw materials.
Exactly right. Well, if we talk about the iron ore and the rare earths that we've got here in Australia and all that sort of thing, mining is the huge opportunity for us.
But then the supply chain falls off pretty quickly. You know what I'm saying? Yeah. So we ship everything off and then we consume everything back, or you know.
We need to be able to process here.
Exactly.
Yeah.
And I think that's critical.
And with the advanced manufacturing side of things, that's where our opportunities are. So with the rare earths, that is a huge opportunity. We've got some amazing companies here in Australia that are now going into that processing stage. So we're digging up the clay, as it is, that's got the rare earths, and then they're processing it here locally. And some of those elements are worth more than gold.
Well, are there a lot of grants in that space, manufacturing in general, at the moment?
It depends on the sector. So rare earths, there is, and there's also manufacturing grants regarding the renewable sector as well.
Yeah.
So they're through ARENA.
Yeah. ARENA does a good job of it.
They do.
Yeah. Except when, you know, sometimes I've seen their grant strategy is a bit questionable, where they give people who have a lot of money more money. But anyway, tell me something. I'm going to ask you a question that I've been thinking about presently.
Yep.
In all the years that you've been working professionally, what was a lesson that, you know, what was a hard pill to swallow that ultimately you had to?
I had one of my old mentors many years ago. I asked the question, "What's the most important thing in business?" And he said, "Cash. Cash is king. If you've got no cash, you've got no business."
Yeah.
And that really, really hit home when I started my business.
Yeah.
Because you burn through cash really, really quickly. And I had a situation in, I think it was 2018, 2019, where very large customer of ours went into administration. They owed us a lot of money as well as everyone else, and we got zero out of all the money that was owed to us, and that just put us on our knees. So it was difficult there, especially in, I think it was around 2019 when that happened.
Yeah,
that was tough.
Yeah.
So I learned very quickly that, you know, don't have debtor days. You know, you got to get the cash in, you got to get the invoices out, get the money in.
Is there a hard decision that the hardest decision you had to make? Tell me about the hardest decision you had to make as a business leader and what that taught you about yourself.
It was the COVID lockdowns, surviving that by far. That was the toughest time in business I've been through. Yeah. And it's just all about survival. You know, for those who weren't aware, Victoria had the longest lockdowns in the world. Yeah. You know, we couldn't go to work. You know, we had to work from home. Clients were stopped. You know, they were in survival mode themselves. Big multinationals were able to stay open on limited things and those sort of things, so they were able to get through and do really well. But SMEs were brought to their knees.
And what are you telling yourself? What are you telling your clients that are stuck in this state of limbo? And we were stuck in it for a couple of years there.
Yeah, we were. Yeah, it's you survive.
Yeah.
You just fight through.
Yeah.
Yeah.
My final question to you is, if you could go back in time and give some advice to your 30-year-old self, what would that be?
Well, that was only 2 years ago, mate. No, it would be smile, enjoy life, and work hard. Yeah. And just stay a course. Yeah.
Good words to live by.
Yeah.
Stuart, thank you so much for doing this.
Pleasure.
Really appreciate it.
No worries, mate. It was a pleasure being on here.
Amazing.